The US government is buying $5,000 worth of MakerDAO tokens every 30 minutes. In this video, I'll explain to you how and why they're doing this. Through a slide deck, how convenient. So let's get right into it. And for anyone that's been following DeFi, everyone knows what MakerDAO is. They've been around for over 5 years. And their main product is DAI, the decentralized over-collateralized stablecoin with a market cap of $4.3 billion. Maker, the governance token, has a market cap of roughly 900 million with a $1 billion FDV. And I know what you're thinking, really, Taiki, you're in DeFi and you're talking about Maker. I mean, I totally understand. Maker has been kind of like this joke coin, and there's like this popular meme all over crypto Twitter where, you know, people say, oh yeah, like Maker ETH is down only, it's going to be down only for the foreseeable future, it's a cursed token, it's untouchable, and historically it's been true, right? They've been right. Since the beginning of 2019, right, this is the price of Maker divided by the price of ETH. And typically when you're buying an altcoin and going further out into the risk curve, you want to be outperforming Ether because, I mean, it's like a lower risk asset, right? If you're like taking on more risk to underperform ETH, I mean, that like doesn't make any sense. However, I do think that the Maker ETH ratio, right, this down only ratio, or this trend is going to shift at some point. And I think the time is now. And, you know, like by definition, if everyone hates an asset and, you know, like by definition, I mean, it's underowned. And if an asset is underowned and the fundamentals are, you know, picking up and there's a really steady cash flow component, which I'll talk about, I think it can actually catalyze the end of this brutal DeFi bear market and actually create like a hated rally where all the Maker haters will like just be super angry, right? It's like, oh, like this is not supposed to happen. And even like the DeFi bulls, right? It's like, oh my God, like I love DeFi, but like not Maker, right? Like, you know, Maker can't pump because, I mean, historically it's been so bad. But let's talk about like why I think this trend is about to shift. And I'll tie in like the US government later, right? I'll get there, don't worry. So this is the profitability chart for MakerDAO. So if you annualize the current like profit numbers for Maker, they're slated to make roughly $83 million worth of DAI. And given that the valuation is like 900 million, that's a PE ratio of roughly 11. And I know people don't like using PE ratio for crypto assets because crypto is mainly a tool for speculation, and I do agree. However, if you think crypto is going to grow as an asset class and DeFi is going to hit trillions of dollars worth of TVL in the future, then, I mean, how are they going to do that, right? Like, I mean, it's going to mean that more dollars have to flow into the markets. It's going to mean that institutions have to adopt DeFi. And, you know, like institutions are going to, like, they're going to care about valuation, right? Like if they're taking other people's money and like investing in like various assets, then they're going to care about profitability, PE ratio, revenues, expenses, moats, profitability, all of that. So I do think it's worth monitoring, even if it might not matter in the short term, because I do think it will matter in the medium to long term. But like, where's the profitability coming from? And this is where the government aspect ties in. So Maker, like I mentioned, is a stablecoin issuer. DAI is over-collateralized and it's backed by decentralized assets such as ETH, BTC, but also centralized assets such as USDC and basically like the dollar. And with the dollar that's currently backing DAI, they've been buying US T-bills hand over fist. I think they purchased over $2 billion worth of T-bills, and their most recent purchase was for $700 million around mid-June. And the composition of these T-bills look like this, where a sixth of it was allocated to 0 to 1 month US Treasuries, a sixth to 1 to 2. I mean, yeah, you kind of get the gist here. So if you think about it, a month ago, they bought some short-term T-bills, right? That like matures like basically now. And what happens when T-bills mature? You get the interest payments. And I'll talk about the buyback program later, but right now Maker has a system in place where, with the interest payments that the entire DAO generates, they're buying back the token, right? So TLDR, MakerDAO buys T-bills. Once they mature, the government pays Maker like interest payments, and with those interest payments, Maker is buying back their own token, right? So technically, the government's buying our bags, right? I mean, like this is like the first time it's ever happened, right? Like, oh my God, like we've been waiting for this forever. And before I get into that, right, like the mechanics, a lot of people think that, you know, higher interest rates are like just generally bad for risk assets, and I do agree. And it's ultimately like really, really bad for DeFi, because if someone can go to Fidelity, earn 5% in short-term T-bills, then it's going to make like the value proposition for DeFi a lot harder, especially when the on-chain yields are lower than that of off-chain yields. And in the short term, like, you know, on-chain yields are still lower, and the stablecoin liquidity is slowly dripping out of the markets. However, I do think that this trend is about to shift. And I think one of the benefits that Maker has is that it can allow anyone in the world through the blockchain, right, through Ethereum, to gain access to the risk-free rate without having to KYC. Of course, it can't match 5%. The DAI savings rate is roughly 3.49%, but I do think that over time, as there's more competition, the delta is going to shrink, and that's going to make stablecoin liquidity on-chain stickier, and it's going to make the case for DeFi a lot stronger. So yeah, I mean, high interest rates, typically bearish, but I think for Maker, given its business model as a stablecoin issuer, you can argue that it's actually bullish, the fundamentals of this token. So let's talk about the buyback program. So it's called, I mean, in the past, they had this buyback and burn program, but it was, people really hated the entire system because, like the DAO buys back the token, the price pumps, and then people sell into it. But now they rebranded through a governance proposal. It's called a smart burn engine, where let's say, for example, there's $2 million worth of profits, right, that the DAO generates. They're going to take $1 million to buy back the Maker token, and then they're going to convert the other $1 million into DAI, and then pair it up and put it on-chain as on-chain liquidity on Uniswap V2. So through this buyback program, it's improving the on-chain liquidity, which might lower the volatility, right, on the way up and on the way down. But I mean, the fact is, right, they're using the interest payments to buy back the token and improving, I guess, the liquidity profile for its own governance token. But how do you value MakerDAO, right? I mean, yeah, they're buying T-bills, but is it really worth that much? And I think the best comparison to make is to look at other centralized stablecoin issuers, right? So I mean, Maker is a decentralized stablecoin issuer, but the other two biggest stablecoin issuers are Circle through Coinbase and also Tether, and these are wild and crazy. I mean, yeah, their profitability is insane. For example, Circle, they raised $400 million from BlackRock and Fidelity at a $9 billion valuation. And institutions, I mean, yeah, they understand how profitable these companies are. And Tether in Q1 alone made a $1.48 billion profit. And I mean, it makes sense, right? I mean, people put money into the crypto markets, right? They put dollars, and Tether issues a stablecoin, and with the dollars that that's used to mint the Tether stablecoin, they buy short-term T-bills and they keep all the profits. I mean, what a crazy business. And unfortunately, as a retail investor like you and I, we don't really have access, or there's no way to gain access or gain exposure to these stablecoin issuers. And right now, Maker is the only way to do so, right? I mean, they're literally copying the Circle and Tether business model and applying it on chain, and also transferring some of the yield on chain, so that if you're a DAO, right, with a big treasury, just not earning yield on anything, they can just lock up DAI at the DAI savings rate, which currently pays roughly 3.49%. And yeah, I mean, that's a pretty good business. So this is this, like the page I showed you at the beginning of the video. There's this constant buyback, and if you, I mean, this is all on chain, so you can monitor it, and I'll also provide all the link in the description below. But every 30 minutes, the system's been buying, or it's been taking $5,000 worth of DAI and then buying the token with it. And it's a sell, but basically what's happening here is that the system is pairing the Maker that it bought with some DAI and then providing it as liquidity on Uniswap V2. So far, it's been a few days that this has been ongoing, and I believe that there's roughly $1 million worth of Maker DAI liquidity. So the system has purchased 500K worth of DAI, 500K worth of Maker. And according to Monet Supply, who's been helping design this entire program, it's roughly an $8 million per month buy pressure. And if you pair it with the equal value of DAI, then the total is roughly $15 million, right? So all the interest payments are just trickling in on chain as profits, and they're buying back the token, also improving the liquidity profile. All this sounds amazing on paper, right? But nothing in crypto is without risk. So let's talk about two of the biggest risks that the Maker token faces. One is the market cap of DAI. Of course, right? If the DAI circulating market cap is growing, it just means that there's more assets backing DAI, and with more assets backing DAI, they can go ahead and buy treasuries with it. However, this is a trend for, yeah, I mean, this is a trend, right? I mean, it's kind of dripping down and down. And if this continues, then it just means that in the future they'll be able to buy less T-bills with it, which lowers profitability. And typically, you want this to be going up, right? And this is the best way to monitor the fundamentals of Maker. If this is going up, then the profitability is going exponential. And I think that's going to coincide with Maker doing really well. They are trying to mitigate this. And right now there's a DAI savings rate where anyone on chain can lock up DAI for a predetermined period of time and earn 3.49%. Of course, if you're a U.S. citizen and you don't mind KYCing and you like don't want to like deal with like on-chain risks, you can buy T-bills on Fidelity for like 5%, or you can deposit on Coinbase and earn 4%. So yes, it's not as competitive, but I do think that this delta is going to get smaller over time. And I guess, like I mentioned earlier, anyone in the world, right, without going through KYC can earn 3.49%, right? It's the permissionless nature of blockchain. And I still think that that has product market fit, even though like, if you're a US citizen, like maybe it's like not that attractive. The second biggest risk that I see is Andreessen Horowitz, right? A16Z. They own so many Maker tokens, and they've been selling a bunch. One of the wallets that they have has $20 million with a Maker, and they've been like sending it to centralized exchanges. And like, what are they doing with it? They're probably selling, right? I mean, there's no way to know what they're doing with it, but I mean, why would they send it to Coinbase? They're probably selling. I actually checked like half an hour ago, they transferred $7 million worth of Maker to Coinbase. They're probably selling it. So, I mean, in the short term, it could be bearish, right? Because literally like they're selling. However, if the supply headwinds go away, right? Like maybe there are buyers that sideline monitoring this, and they're like, okay, like I'm not going to buy this until they sell. So, if there is enough sideline like potential buyers waiting for this to happen, then, the longer time goes on, like the more distribution that happens from A16Z that can actually, that can actually clear the supply headwinds. And like even then, right? I mean, if the government's, or if there's like $8 million worth of buy pressure like every month, and people like start to price that in, then like can't that offset the sell pressure? Yeah, right. And there's like no promise that they're going to sell off their entire stack, even though like it kind of seems like they're going to do so. So I think if you're considering buying the token, you should be under the assumption that A16Z is in the process of selling their tokens. So those are the two biggest risks. But let's talk about the catalysts aside from like the short-term bullishness, right? Of like, the interest payments directly going into like the buyback program. So there's two. So one is called the Endgame. So Rune is the founder of Maker, and he's been trying to set up like this, how do like you actually like decentralize a DAO? Like where does Maker want to be in 2024? So this is like more of a 2024 story, I believe. So maybe it doesn't really matter in the short term. However, right, like if you're trying to price in like the future cash flows, if you're trying to be like a longer term investor, then maybe this is something to at least be aware of. So I'll link this in the description. I'm not going to go through this, right? But I'll try to simplify it as best as I can. There's a thread that kind of goes over like what this actually means. And TLDR, Maker is going to rebrand to a new token, and there's going to be like a token split. So if one Maker is worth $900 after the endgame proposal, after everything goes through, you're going to, instead of like one Maker, you're going to own 1,200 units of 1,200 units of this new governance token that's worth 75 cents. And the name of Maker and DAIs, it's going to change. No one really knows what it's going to be, but just know that that's going to happen in the future. And also, I think the biggest takeaway from the end game is that Maker is a DAO comprised of SubDAOs, and there's 6 DAOs underneath MakerDAO. I know it's really complicated, but just stick with me here. And Rune wants all of these SubDAOs to all have its own governance token. And how are they going to distribute these governance tokens? They're not going to just pay the insiders and whatnot. The team members might get some allocation, obviously, but the way that they want to decentralize and distribute the governance tokens is through staking. So if you own Maker or DAI, right? If you own Maker, you can stake it and get a slow trickle of all these SubDAOs. And if you think that these SubDAOs are all worth, let's say, who knows, like $50 million of value, then if you stake Maker, you technically get $300 million worth of, value. Of course, we don't really know what this looks like, but just know that's going to happen. You'll also be able to stake DAI to receive these DAO tokens, but I'm assuming that you'll receive like more tokens like by holding Maker, right? And I think Rune, right? If you go through like the MakerDAO Discord, he wants to get people used to earning yield on DAI, right? Through like the DAI savings rate, and through this, I'm sure that the demand for DAI isn't gonna be down only, right? Because if people know that this is gonna happen, then there's gonna be demand for DAI. Also, you'll also have to view MakerDAO as a business. this is like the expenses for MakerDAO, and since the beginning of the year, it's been going down. And obviously to buy back like the Maker token, I mean, the business itself has to be profitable. So if the profitability is increasing, then technically, right, that's more profits, that's a lower P ratio, and then people can start to price in, oh, like the future cash flow of MakerDAO is X. Oh, like it seems pretty sustainable. Maybe it's bearish if the Fed lowers rates, but if the Fed lowers rates, yes, like the interest payments are lower, but maybe you can, if you do like a discounted cash flow analysis, maybe you kind of get the gist there. Of course, I have no idea how to value these tokens, to be honest, right? Like, do people even care about P ratios? Do people even care that, like the government is like subsidizing these purchases? I have no idea, but let me just go through the summary so you kind of get like why I'm personally positive on like the short, medium, and long term for the Maker token, despite, MakerEat being a cursed chart for years. One bearish case for crypto is that there's like not that much retail interest. And I run like a primarily like DeFi focused channel, and interest in DeFi has been like literally down only, right? Every time I upload a video, I lose subscribers. I don't really blame anyone, right? Like DeFi is not that exciting. And this generally means that we're in this PvP environment, right? Player versus player, where there's not new money coming into the ecosystem. And if that's the case, then people trading crypto right now, they're basically taking money from each other. So in order for me to make money, someone else has to lose money. It's a very, very difficult game to play, right? At least on chain, or just like in crypto in general. However, you can make a case that, okay, like, well, the crypto markets are very PvP, but maybe Maker is a PvE token, right? Player versus environment. Because if you buy Maker, yeah, I mean, A16Z might be dumping on my face. However, I know for a fact that, the US government interest payments are directly going into the buyback program, right? So if there's a consistent buy pressure from like government interest payments, then like, why can't everyone like benefit, right? Of course, there's traders in this coin, like they're leveraged long, they're gonna take profits, all that. But, like, if you think about it from like a risk-adjusted return perspective, like what's the downside? I mean, yeah, like A16Z might sell and like price might go down, but there's also a bunch of people that's been waiting to buy because this is public information. And then like as more time goes on and as more tokens get distributed, then people will start to price in, oh, like maybe they're done selling, the market has absorbed the sells pretty well. Okay, maybe it's time to go long. So I'm not using leverage. I'm like just owning spot Maker. That's kind of where I'm at. And I actually dropped a MakerDAO research report on July 10th when the price was much lower, right? Obviously, I bought higher because I'm not great. I'm like a bad trader. But like I'll provide this in the description below. It kind of goes deeper into like how the entire model works. And like our team, we're going to publish a part 2 sometime next week. So if you want to keep up to date with MakerDAO and also free content, make sure to follow HFA Research. It's my research company, and there's a free newsletter. Everything that I post is free, 100% free. So yeah, check it out. And if you like the content, make sure to like and subscribe, and check out the premium Discord. Link is in the description below. I upload three premium content or 3 premium videos every single week, and you also get access to a really humble, like really nice DeFi community. So if you're interested, check that out. And let's check the current buybacks. Right, 8 minutes ago, 5,000 DAI. Thank you, U.S. government. Hopefully, it can offset the Andreessen Horowitz selling. So thank you guys for watching. See you guys later. Bye bye.